So tonight was what would normally have been our standard property update. Obviously tonight we have got a few other things that are happening in the rest of the world. So I really wanted to try and make it relevant tonight to what is happening, what we can be getting as property investors, where we can be going, what our tenants may be doing, and how we can hopefully, I suppose the key thing is manage our cash flow in this current time. So the first thing to just mention that is coming in, which was coming in anyway, it was expected, was the fact that capital gains tax, if you are in the process of selling a property, as of the 6th of April, you will have to pay your capital gains tax within 30 days and submit a corporate capital gains tax return to confirm what payment you should be making. Now, I know the housing market has slightly slowed. There may be a few more transactions that happen. We'll see where things go in the next couple of weeks. So this may be relevant if you are selling something, if it's going to go through after the 6th of April. It may be that doesn't happen because of the current situation. That's kind of the main thing that I just wanted to cover, which is not coronavirus related, as it's something coming in very soon. Theoretically, it should hopefully not be a big issue, because obviously if you are selling property, you have money in the bank, and that money in the bank should hopefully cover that amount. If there is issues to make that payment, there is always going to be that time to pay scheme to help spread the cost. So hopefully there is a facility there to help with cash flow. So what I am just going to do is move on to our coronavirus side of things. Now, the government over the last 2 weeks, including tonight, which I was listening to half an hour ago to just check what they are actually saying for the self-employed, we've got a whole host of information available. The frustrating part with a lot of it is it's incomplete. Now, I know the reason it's incomplete is because they've been trying to get this out to the population to say this is what we're going to be doing. It's going to take time for them to get things into place. So at the moment, my ideal guide for anybody would be to plan for the worst and hope for the best. Really plan for the next 6 months, look at your cash flows, look at what's going out. We'll cover a few other bits of what to be considering as we've just gone through what there is available to different people. So the first thing I wanted to mention was the Corona Job Retention Scheme. Now, this is only relevant to you if you are an employee of your own company. Now, there are a few question marks of whether if you're a director and an employee on a payroll being paid as if you were a paid employee, whether you can use this furlough scheme. As a director and employee, you will still have director's duties to complete. However, you are not potentially going to fully be able to derive your income maybe from that business if you can't get out there, view properties, see things, do things. Now, the main thing about the job retention was you're not allowed to do anything apart from, you are allowed to do some training, you are allowed to do a few bits and pieces, but it is very restricted. So if you're still looking for properties, talking to people, they might argue you're not actually stopping working. If you're just doing training, doing learnings, then that is all allowable within this scheme. So one issue we do not know the answer to just yet, we need the guidance, but something to be aware of. If you are a director on a director's salary, you would potentially be eligible for the 80% that they are looking at paying out. Obviously on a director's salary, most people are on maybe 715 or this sort of low amount, which 80% of that is something, but obviously not lots. So on that basis, we don't know whether there are possibilities at the moment to increase that salary, whether that salary will stand. The one thing we are very clear on at the moment is dividends will not count towards it. This is to do with salary. This is to do with getting a pay slip each month from the company that you are the owner and shareholder of. So if you are not on a payroll, this does not help you. However, the positive thing is if your tenants are employees, and they are furloughed, they should still be getting paid, touch wood, at least 80% of their salary, assuming they've not been laid off or they have not been made redundant. So that should at least stabilise your income source from your rental properties. So if it doesn't help you as an employee of maybe your company, it may help you to retain your rental income because your tenants are still going to get paid. Now, I'd probably say this is great news for anyone who's got buy-to-lets, because a lot of buy-to-lets tend to maybe be families, be professionals, be working. So on that basis, that should hopefully stabilise your income. Now, we'll look at something on the mortgage side of things when we get through the slides a bit further, but hopefully there is something there that maybe stabilises your income, your cash flow coming to you. Now, that deferral scheme, I'm very briefly going to mention it because it's only relevant if you're VAT registered. So if you've got any developments that you're doing a new build, development company, if you're getting refunds, you will still get them. If you have VAT to pay, you still have to send in the VAT return, but you don't have to necessarily pay it if you want to just protect cash at the moment. It will need paying. You've got arguably 12 months till it needs to be paid. So it just gives you time to plan your cash flows in the future so that you're not suddenly losing a batch of money right at this moment in time. The income tax deferral scheme looked really hopeful, but unfortunately this is very much aimed at the self-employed. Now, as we're mentioning self-employed, and I think that kind of comes down in a moment anyway. Yes, that's my next one as well. So self-employed means if you are someone who is filling the self-employed pages on your self-assessment tax return. So many of us may be doing a tax return, but if we're doing a tax return that is doing salary and dividend, you're not self-employed in the strictest term by what is coming out at the moment from the government. Self-employed is your plumber, your hairdresser, your plasterer, the people coming on site who are self-employed and derive their income and prepare a set of accounts and do something like that. It is not someone who is just getting a salary or just getting dividends. That is investment income, so it doesn't seem to fit this bill. Anyone who is self-employed and has property may be able to use this scheme where they can defer their July payment and pay it in January next year. If you're thinking, I don't know if I can pay my tax bill in July, there is the time to pay scheme and you can speak to them and look at spreading the costs. So you might say, can I spread it over the next 6 months? So if you say have $1,200 to pay, you might be able to pay 200, 100, whatever it may be, to actually spread that cost. Now, as of yesterday or earlier today, the only thing on hand for the self-employed was going to be the universal credits, which is basically about 90 something pounds, about 94.80, I think, if I remember correctly. Now, if your tenants were self-employed at 94, 95 pounds per week, they can't live off that, they can't pay their rent. The great news today is what they've announced. Now, obviously, if you have someone who has to go onto universal credit in your property, then you've got problems because that person won't be able to pay the rent. The problem for you, if you're not getting your rent, is you could potentially look at universal credits for yourself. However, if you have property in your own name, when you do applications for universal credit, it asks you what your assets are. Now, asking you what your assets are is a problem because if you've got buy-to-let properties, HMOs, that's adding asset value to capital value. So you're going to potentially be over the income, the asset levels and wouldn't receive any universal credits. On a positive, because they've now announced that self-employed tenants or self-employed individuals are going to now start getting up to 2,500 or 80% of what they actually have earned on average over the last 3 years. So that now means they're arguably similar to what an employee would get, and any self-employed tenants, touch wood, should be able to pay their rent. The biggest issue that we have at the moment is cash flow. The reason I say cash flow is because this system is not going to be in place for the next 2 months. It was very clear from the Chancellor's statement today that the first batch of payments for employees to employers, if they have any cash flow issues, is not going to be till the end of April. For self-employed, that money is not going to come till the beginning of June. So it may be your tenants will be able to pay, but not yet. So we'll come back to that in a minute when we look at mortgages to see what options you've got from a cash flow point of view to keep everything going and tidy things up. If you are sick and an employee of your own business, you may be able to get some sort of sick pay back, which again, it's only £95, but the government will give you the £95 sick pay rather than you get nothing for those weeks. So, retail, hospitality and leisure businesses. Anyone who's potentially got commercial tenants, there has been a lot of help for these types of businesses because all these businesses were literally closed down by government closure. They were not allowed to open. They've been given a lot of grants and reductions in different things. Hopefully, that means that they will have some cash available to pay their landlords. They may not be able to pay the whole amount. They may be struggling from a cash flow point of view, like many other businesses at the moment. However, if you can come up with payment arrangements, then hopefully this tides you over, gets over the tough patch. And this is where we need to be looking at our cash flow to talk to our tenants to see what they can afford, what they can't afford, how we can fit it all together, especially as some of these grants, some of these different arrangements come into play, so that as they get their money, we are one of the people that they are paying to make sure that we are getting the money that we need to sustain ourselves. Now, for smaller units, there are cash grants available, which is potentially great news because that means hopefully if they get the cash grant quite quickly, which I know there have been letters out to businesses to say you are eligible, I think they are not going to get that money until maybe April sometime. So they might not have the money today, but maybe in the next 4 weeks they will get the money. So hopefully that means it may just be a timing thing and you need to have a look at agreeing with them a timetable to make things work for them and for you. Nursery businesses, I'm going to skip over because unless you have tenants who are that, it's very specific. Support for businesses that pay little or no business rate. So this may be if you've got a shop with a top, the shop element may be eligible for a grant. So hopefully, again, that is something to be aware of. So hopefully your tenants can continue to pay the rent, which obviously keeps you running as well. Now, insurance is an important one to mention, especially for landlords and anyone with property, because different policies have different things. There are rent guarantee schemes, there are loss of income protection, there is potentially pandemic cover, there may be government closures, there is all sorts of things that may be in your insurance policy. Now, I know it's not one of the most exciting things to read, having read a couple of policies recently, but it might be really important for you to be looking at it to see whether you are covered. Now, I know from personal point of view, we have student properties and some of the students have been saying, we want to leave, can we cancel our contracts? Now, obviously, there's lots of different things to consider when you're getting those sorts of requests. But one of the things that you need to consider is, depending what you do may depend on how your insurance company deals with it. So before you make any actual decisions, I definitely recommend speaking to your insurance company, because if you cancel a contract, you may not get a payout. If you say to the tenants, I can't cancel the contract, and they don't pay, that may fall into the loss of rental income, and then you can start proceedings potentially to try and recover the rent, but you will have maybe something to claim on your insurance policy. So there is a whole host of bits that don't jump into doing anything without getting all the information from everywhere that you need to make sure that you're not kind of being very generous, but then you're very much losing out from some of these things. We've got both an ethical position to take, we've got a moral position to take, and then unfortunately there is this financial cash flow position we need to consider, because obviously as we can't necessarily get out there and do some of the things we would normally do, we need to make sure we're looking after ourselves and our families as well. Now, mortgage and rent holidays. The mortgage lenders have all started putting online applications up so that you can put a claim to get a mortgage holiday from them to make it a bit easier, because I know if anyone's tried to get in touch with them, their lines are pretty full at the moment. It's taking a long time to get through. Now, most mortgage companies will not give you a mortgage holiday unless you have some sort of evidence from your tenants to say that they can't pay the rent. If it is for your buy-to-lets, if it's for your own home, if you're struggling because you're not getting money from elsewhere, they will look at your personal situation. If you have more buy-to-lets, HMO properties, you need to speak to your lender, and they'll probably only give it to you if your tenants are struggling to pay you. The reason being, the idea that the government said was, if your tenant can't pay, you may need a holiday from your mortgage because you might not have the reserves there to cover all the costs. Again, it's trying to look after the cash flow side of things and keep everyone on an even keel. Now, tenants may be able to have a payment holiday, landlords can have a payment holiday. Now, depending what you do will have an impact on what it is. So it's whether you agree different payment terms with your tenant, whether you cancel the rent, whether you agree a half rent. That will obviously depend on your income side of things. The mortgage holiday is just that, it's a holiday. You will still owe that money, you'll still pay interest on that money. So it's not that you won't ever have to pay it again, you will have to pay it at some point. So you just need to weigh that up with what can you actually afford to pay. Having read a few of the general details about what they're offering, most are saying it won't impact your credit file. So that's a positive from a kind of credit point of view, that having a holiday should hopefully, touch wood, not have an impact on future lending due to the current situation. Company's house. Anyone with a company, so anyone who's got a limited company is thinking, my accounts are due now, or they're due to be filed with Company's House. Now, arguably anyone who's got a June year end last year, the deadline is next week, the 31st of March. If there is, for any reason, you've had issues because you can't get to your accountant or you can't be getting information to where it needs to be, you can apply for an extension of 3 months, which just gives you time to get things sorted, get organised. That is open to all businesses or limited companies. The main thing is you've got to put in the application before the deadline. So, for example, anyone who's got a June year end, if you needed to extend it, you need to get that application in before the 31st of March so that you've got it extended to the end of June before you need to file things. So that is in place at the moment. We don't know how long that is going to be in place. I assume till the end of the crisis, just to give people time to do things. If you have got duties like this to do, I would suggest that you get things sorted early so it just gives time to resolve things. I know for our practice, we're still up and running. We've got most of the team working from home. The only issue we're probably having, it's a timing thing. It's slowing us down because we're not all in the same building to pass things around quickly. So it's just making sure there's sufficient time to get things together, get things in place. So that is the Company's House side of things. So then there's the support for businesses paying tax. So there is this time to pay service. It's been in place for a long time now for every business. They've just expanded this with the coronavirus side of things. So there is a number there. So if you do have any issues and think you may need to get in touch with them, speak to them early. They're likely to be, hopefully, agreeable to different arrangements, and just try and set something up to make sure that everything is going to be sorted and fine to move things forward for you. Support for businesses with the business interruption loan scheme. So this could be a great opportunity or a big problem. It depends how you look at it. Now, if you can get the funding and you've got a viable business and you're looking at doing different things, these are no interest loans for 12 months. So from a property investment point of view, that could be quite nice if you can get an interest-free loan for 12 months. However, it is a loan. After 12 months, there will be interest chargeable, and it does go through the normal criteria of getting loans. So it's not just free money. You do have to kind of have a business plan, potentially. You have to show cash flow. You have to show them how you're going to be paying it back. I've heard recently that they are still asking people to do personal guarantees, even though I think the scheme says you shouldn't have to. So if you are having funding gaps, you may be able to get a loan, an interest-free loan, which covers you through those difficult periods, whether it be the next 3-4 months. It might be you're not going to get your rental income for 4 months, so you may need to get some sort of loan. This could be a good option for you if you can get the paperwork through and get the bank to give you the loan. And with 12 months interest free, it might be a great way to just balance things out. There's quite a few different bits that you can find now on the eligibility criteria. It's open to most businesses, whatever structure they are in. The main thing is they'll just ask you for most of the normal bits that, to be honest, if you've been investing for a little while, you'll know all the normal bits that they are wanting. It's similar sort of process. It's not really anything new. So moving on to what can you do? First of all, is the age-old stay healthy, stay at home, look after your family, look after your community. Where possible, work from home so you can manage your admin side of things, manage your business. I know that as an investor, there are certain jobs that you may need to get sorted, get done. Just make sure you're careful as you're doing this. Next, what I would say is definitely work out what your expenses are going to be. What costs have you got going out? What mortgages have you got? What bills have you got? If you've got buy-to-lets, there's probably less bills. If you've got a HMO, you've possibly got a lot of bills. And just remember, if you've got HMOs, as I have, that have lots of people in who are now all of a sudden staying at home all day, every day, gas, electricity, water is probably going to go up. So your bills are going to get a little more, not a little less. If you've got student properties, you may have the opposite side of things. That if students are going home to parents, you may find that your electricity, gas, water, all those bills go down. However, you have got the insurance issue of having now an empty property. Obviously, then you need to have a look at what your rent is. What are your tenants doing? Which ones are at risk? Which ones are not at risk? From what we've heard from the government, obviously anyone who's employed and retains their job is okay. They should get some money, so they should be able to pay their rent. Anyone who's self-employed, we are now finding, yes, there is some money there for them. They should get some income. It just may be delayed like the employees. So if it's delayed money, that is going to impact cash flow, but you're still going to get your money at some point. So you need to just plan for those cash flow implications. Make sure that you are looking after your tenants. Make sure you look at your costs. Is there any costs that you can cut? For example, can you actually stop the direct debits from your utility companies and pay them in a couple of months' time when the money is hopefully there in the bank to pay them? Can you cancel your water? Have a look at what you are paying out to see if there's any way of pushing those payments back, especially if you're going to be kind of reducing your income for a little while people get on their feet again. Now, we can help if you need any assistance from that point of view, But the main thing is just starting to look at those bits and pieces now to hopefully get on top of it. Now, we've done a call already this week using this method on general business updates. We've got our property one tonight, and we will be doing something on self-employed and furloughed employees definitely in the next couple of days, the next week, as all the information starts to come out, just to make sure that we can keep everyone on top of who can claim, who can't claim, what you need to make sure you're doing to be able to make your claim. So at that, I'm going to stop sharing my screen and go, has anyone got any questions, any wants to ask anything at this point in time to do with anything with property, how they might be affected, that side of things? Yeah, go on, Warren.
Yes, hi, Kimberly. Just a quick question. Bridging, has there been anything mentioned about bridging companies? So I'm currently in the process of selling a property, but I've got a bridging loan on it. So I didn't know. I know obviously there's mortgage. Obviously, mortgage applications look to have slowed a little, and obviously people aren't going out and valuing houses, which will obviously prolong that process even more. So potentially, in terms of timing, I'm looking towards running out at the end of my bridging loan.
Right. What I would probably say is bridging companies are different. They're not mortgage companies. So they will not look at doing any mortgage holidays. I know we had a similar sort of thing. We've just come off a bridge and gone onto a mortgage, and we had a timing issue. It was about a 6-week timing issue. We actually, in the end, managed to find a investor to come in to lend us some money short term. So maybe three months, 6 months, or it was kind of an as soon as possible type payment back, yeah. Which meant we could clear the bridging loan, so we didn't go over the bridging loan, which tied us over just to get us onto the mortgage. And then as soon as the money came through, we could obviously reimburse the investor with the amount that they were due with their fees, their interest, however it was agreed, so as to make sure we didn't go over the bridge. That's definitely one option. Have a word with the bridging company. Can't say that they're going to be the most agreeable. It's one of those weird times, I suppose. Unfortunately, when it takes that little bit longer to come through, that kind of becomes the next question, I suppose, for you as well, doesn't it? We were lucky to get everything through about 2 weeks ago, but I know they're not accepting new applications a lot of places, and they're on a lot more restricted terms. So hopefully, if it's nearly there, you can just push it over the line while everything's still as it is.
Okay, thank you.
You're welcome. I had a question. When you talk about hospitality, does that include serviced accommodation? I want to say yes, by the simple fact that it says self-catered accommodation. I've not seen the details of it because I don't think there are many details available at the moment. However, it looks like there may be some assistance there on the basis that, I'm just going back up through the notes of what it says. So you may be able to get some sort of grant. Now, the council is writing to people who it thinks is eligible for it, but that's more from people who are paying business rates, which potentially, if it's residential, you may not be paying business rates. So on that basis, you may need to give them a call to find out if you are eligible. But it does specifically say on eligibility, it's a business based in England, so it does need to be in England, not Wales or Scotland. And it's in the leisure sector, and that specifically says hotels, guest and boarding premises, and self-catering accommodation. You are paying business rates. If you're paying business rates, then you will definitely be able to get some sort of cash grant, I would think. Depending on the size of the rates you're paying, if the rateable value is under 15,000, there is a grant of 10,000 available. The businesses who have a rateable value of 15 to 51,000, they can receive a grant of 25,000. So that might be very good news to keep things tiding over. For a lot of the serviced accommodation, as I know, bookings dropped off a cliff about 2 weeks ago, and any bookings that you did have probably have cancelled, which has not necessarily helped the business. However, I know depending where it's located, you may be able to cover someone in for emergency accommodation. You may be able to get someone in who, if I've seen quite a few families who are NHS workers who are moving out of their family homes to live in different places so that they're not going to contaminate the rest of their family. There are people looking for different things at the moment. So it may be you want to actually consider reducing the price, but even if you reduce the price so you can get some of these people in, it may be that it pays all the bills, so you kind of get a little bit of profit, or you at least break even so you're not losing money. Obviously, there's isolation people, there's NHS workers depending. I know there's a couple of people who I've seen a lot of notes going around some of the different groups of people who are coming back to the UK, who were out of the UK, and are coming back to the UK, but their properties they've got in the UK are already rented, so they can't go home. So they need somewhere to live while they're over here. So there is options with serviced accommodation. It's just you kind of got to think a bit more outside the box than what the original intention of the serviced accommodation was. And potentially location might have a key factor of what is going to be the best one. If it's something located quite near a hospital, that might be a great way to go and try and find people who may need separate accommodation for them. Any other questions that we have today? I think the biggest things that I keep seeing in a lot of the groups, the questions come down to, are you self-employed or are you employed? Unfortunately, I'm seeing a gap in the middle. Anyone who hasn't got a payroll through their own company is employed potentially, but not self-employed. So they're not going to get the self-employed help, but if you're not on a payroll, you're not going to get the payroll help. Anyone who has self-employment will get that if that's the majority of their income. If you're in the middle, there's not a lot of help available, but hopefully your tenants are getting the help. And if your tenants are getting the help, they are going to keep paying you. And if your tenants are still paying you, hopefully you're still going to have the money that you needed to pay the different aspects of things. Obviously, if you keep track of your cash flow at the minute, cash is king. It's a statement that has been said many times over the years. It's something I say a lot of the time to a lot of people who want to go spend their money. But now it's certainly one of the most important things. So if you can keep your cash in your bank account longer, that's probably going to tide the way. And unfortunately, this is probably not a short-term problem. It's not going to be 3, 4, 5, 6 weeks. We're probably looking at 3 months. We could be looking at 6 months. So it's kind of a batten down the hatches and get prepared. And hopefully with that, if you're planned, you at least know where the point where you hit the issue is, so you can have planned and figured out what options you have at this point. Obviously, everything that the government's laid out at the moment is for the next 3 months. It's till the end of June. We will see what further announcements come out in terms of help and support. If you don't have any properties your own name, you may be able to claim universal credit. Again, not lots of money, but it may be a way of just helping kind of put a little more money into your hands to help kind of get the groceries and do the different bits and pieces. If you have properties in your own name, that might slightly be an issue because it does ask what your assets are, what capital items you own. Anything anyone wanted, any other clarification on tonight? Right. Well, that was kind of all the different bits that I just wanted to kind of give a brief overview to hopefully give you an idea of what is available to different people, to different places, because Some of this might help you, some of this may help your tenants, which if we can help your tenants, we can obviously maintain your cash flows as a landlord. The main thing is looking after yourselves at the minute, looking after your cash flow. And from that point of view, hopefully we can all kind of get through this as unscathed as possible. There's a lot of help out there. There's a lot of questions. If anyone has any questions, tax kind of accounts, what you can claim and things like that, feel free to drop me an email, drop me a note, drop me a messenger, and hopefully we can obviously help point you in the right direction or just clarify things so you're in a good position to hopefully get the right answers, get the right help, and keep things going for as long as we are living in this new weird way of living. So on that basis, I'm going to finish us off tonight, hopefully short and sweet for us this evening, so that you can go and relax a little bit at home, like you've probably been doing the rest of the day, like myself. And I think tonight is the night where it's giving the NHS a round of applause, so hopefully you might join in that at 8 o'clock. And I wish you all well. Please do join us for any other calls we're doing. We'll be doing some more this next week as different things happen. So just make sure you keep updated, and give me a shout if there's any questions. Have a great evening. Thank you. Bye, everyone.